I fully expect that even before the halving, I'm kind of with Adam Beck. I think before the halving, we'll probably be at 100. That we're going to kind of march from here to 100. And I think this next run with the approval and the halving taking place, it would not surprise me at all. I mean, Max Kaiser thinks the top's at 220. I think the top could be 300, 400, 500 on this next run. And then in turn, by the way, it'll correct, just as it always does. But if you kind of look at the patterns of the multiples of the bases that it forms, I tend to believe that we're going to go substantially higher than where we are today. And that's probably in a 25-6 scenario. I mean, I'm not sure that happens in 2024. I would guess the average price in 2024 might be in the hundreds somewhere. But then it really starts to ramp higher as more and more people, get involved. So I got into Bitcoin in 2013, 14 when I bought my first coins.
So long.
Yeah. Well,
I really love that.
Yeah, but not in a big way, because and I'll tell you why. My concern was, I'd been a technology investor my whole career. I was very familiar with computers. I was very familiar with the availability of computers and, having IBM green screen. I mean, I was programming in DOS back in the early days. And as a result, I just thought, how can you have reliable money based on a computer? Computers blow up, and you unplug them, you reboot them, et cetera, et cetera. And of course, I didn't understand blockchain, and I didn't understand hashing. I didn't understand difficulty. I mean, all the things that are part of Bitcoin were totally foreign to me, but I was intrigued. And so I started learning. And, from 2013 till today, my conviction went from, I'm pretty lowly, I'm going to buy a little of this in case it works. And I'm pretty lowly convicted that this can really turn into real money, to I'm completely convinced that this is another form of sound money. The odds of technical failure are extremely low, like less than 0.5%. And Bitcoin really does kind of represent digital gold. And in many ways, it's superior to gold because it's easier to store and transfer. The only negative is it has an ongoing energy cost to run the network, but I think it's small enough relative to the total value of the network that it won't be problematic. So, to me, it's a better form of gold. Right now, the issuance rate of the two is about the same. As you're probably aware, in April, there'll be a halving, and so the issuance rate of the Bitcoin reward will fall in half. At that point in time, gold, on a stock-to-flow ratio, Bitcoin will be sounder money than gold. And then the other piece of it, the equation that I think is important to focus on, I mean, people ask me what can go wrong with Bitcoin. I say, well, there are two things. One, if it technically blew up, and, you got to understand how it works and what it is, and the core developers and the nodes. There's a lot to learn. But once you learn all of how it works and you realize that we've mined over 800,000 blocks, and it hasn't blown up, you start to develop a level of confidence that, this thing's probably not going to blow up. It looks pretty good. So that's part one. Part two is it's got to be adopted. Money is just, as Carl Menger said, money is just the most liquid good, right? And so it's what everyone agrees on is money. I mean, we all agree dollars are just a piece of paper with ink on them. We all agree that we know what they are, we know what they look like, we all agree they have value, we exchange them. The same is true of Bitcoin, right? There are 21 million of them. You can verify them, you know what they are, you control them with a private key, etc. But if nobody gave a shit, it wouldn't be money. So the other metric I watch is adoption. Are more and more people using this shit? And is the value of it going up? And the fact of the matter is, albeit very volatilely, the value going up, but it's going up. And probably more importantly, and I think a better metric to just watch, number of addresses, number of users, number of transactions, number of use cases, number of applications, those things are all growing very, very rapidly. And that, combined, with the technical risk being lower in my mind now than it was in 2013, and with the use cases growing very consistently and rapidly, I'm quite convinced, and with a limited supply, I mean, it'll be a while till we've mined all 21 million because asymptotically we're approaching that number. But with a limited supply, I'm quite convinced that this is going to be the superior form of pristine collateral. It's going to be the best savings money we've ever had, better than gold. Which is not to say that I think the value of gold is going down, because I think given the monetary debasement that's going on, gold's going to go up a lot. Bitcoin's going to go up even more. Is kind of the way I see the two. I think Bitcoin is the fastest horse in the monetary debasement race, and I'm stealing that from Paul Tudor Jones, who's a really fantastic investor, has been very successful. So I think Bitcoin will outperform gold, but if you're 80 years old and you're putting all your wealth into one area, which I would never advise anybody to do, you're looking for a sound money to put your money into, I would recommend gold over Bitcoin, because gold never goes down 80% on a drawdown, and Bitcoin's had 4 of them. So, to me, Bitcoin is more your aggressive growth stock, and gold is more your bond, that will, give you income and growing, income in terms of increased value and protect your purchasing power, but it's not going to, go wild to the upside unless we have a monetary reset. But in turn, it's been out there for so long, so many people hold it, it's so hard to produce, etc., that, like the biggest annual drawdown we've ever seen in gold was 30%. That was like 1 year. I think, generally speaking, a big drawdown in gold is 15 or 20%. But think about it. If you're older and you've got a lot of money, you don't want to have an 80% drawdown. You've got $10 million, you buy Bitcoin, and Bitcoin goes down 80%, which it has in the past, right? You've lost, 80% of your capital. Well, that's pretty devastating. So to me, I'm a risk manager and I'm an investment manager. I've got a lot of older clients, and what we do is we figure out what the right percentage of Bitcoin for them to have is, so that if it goes down 80%, that doesn't change their lifestyle. And then, we put the balance in gold and gold related things. So, it's kind of, you say which is better. It's kind of like one's an apple and one's an orange. Do you know what I mean? And they each have different characteristics.
No, I meant to say, what is better money, not necessarily the price action.
Oh, better money. Oh, Bitcoin's better money. Oh, yeah. Bitcoin's definitely better money because, look, it's verifiable, it's easier to transfer, it's less cost, it's digital, we're going to a digital world. Bitcoin will ultimately replace gold. There's no doubt. Gold will just become an industrial and jewelry metal. But it's interesting. All Bitcoiners think that's going to happen tomorrow. And it's not. There's going to be in my opinion, it's not. It's going to take time. But again, Bitcoin will continue to outperform gold. So if you're a very aggressive investor and you can live with the potential drawdowns, if I were in my 30s, I'd advise all my kids, they've got some savings. I've said, put it all in Bitcoin. You don't need any gold.
Right, but I think
go ahead.
The way Bitcoin is better just because Bitcoin is digital, and gold's physicality is itself liability, because you can basically hold gold in some vault, but you're not so sure if your gold is there or not. Maybe they rehypothecated the gold, and
well, that's right. No, that's exactly right. The verifiability of it all is just it's a real mess, and there are all kinds of problems with gold. There have been fake gold. Tungsten is a metal that's very close to the atomic weight of gold, and so in China they found a ton of gold bars that were basically tungsten plated with gold. So yeah, and now there are ways to detect that. And in fact, there are gold dealers here where if you take them a kilo bar, they're going to saw it in half to protect against that risk. Now, their machines will actually give you a surety that the thing is solid. But the point is that gold's got a lot of problems. On the other hand, if the computers aren't working and you're looking to just do a cash exchange on the street, a gold coin is a gold coin. Most people know what it is, and you can take a gold coin into any country in the world and go to a coin shop and exchange it for the local currency. I've always said, having gold is really good for bribing the border guards when you're trying to get out of Dodge. Well, as I say, it depends a lot on the client, right? I have clients that have 1 or 2%. I have clients that have 50%. Personally, I'm about half and half. I'm 66 years old, and that feels like kind of the right balance to me. Look, and by the way, what'll happen there is if Bitcoin outperforms gold the way I think it will, eventually that half that's gold will become 5 or 10%. And I probably won't sell it. But, I'll say this, as I earn money these days, I don't use any of it to buy gold. I'm done buying gold. If I earn money, I buy Bitcoin. My clients varies. I have people who have 1%. The only thing I really say quite strongly, I pound the table on it. I say, having zero is wrong. You've got to have some Bitcoin because we don't know what's going to happen to it, but it could go up 10x, 100x, 1,000x, 10,000x over 20 years. I think it might. And therefore, if you have zero, you don't get to participate in any of that. And, there isn't an investor in the world that can't live with a 1% loss. So, hey, Mr. Investor in EMA, you need to at least take 1% of your capital and put it into Bitcoin, at least. And I tend to try to push people to get to 10%. And some people get much higher, and they should. But, it's I mean, and like I say, it doesn't, if it's as asymmetric as I think it is, it's not like you need to take 100% of your money and put it in Bitcoin. You don't. I would never recommend that. But to have zero in Bitcoin, no, that's very bad too. So I think and I know a lot of 30-year-olds that are 100% Bitcoin. That's fine. They can do that if they want. They're taking risks, but that's okay. They're young. They can recover. They've got a very long time frame. They've got earnings power. As you get older and later in your life and you start working less and your earnings power goes down, preserving your assets becomes a bigger focus than growing your assets. You might have enough assets and what you want to do is not lose. You're not concerned with winning big, right? I fully expect that even before the halving, I'm kind of with Adam Beck. I think before the halving we'll probably be at 100, that we're going to kind of march from here to 100. And I think this next run with the approval and the halving taking place, it would not surprise me at all. I mean, Max Kaiser thinks the top's at 220. I think the top could be 300, 400, 500 on this next run. And then in turn, by the way, it'll correct, just as it always does. But if you kind of look at the patterns of the multiples of the bases that it forms, I tend to believe that we're going to go substantially higher than where we are today. And that's probably in a 25-6 scenario. I mean, I'm not sure that happens in 2024. I would guess the average price in 2024 might be in the hundreds somewhere, but then it really starts to ramp higher as more and more people, get involved.